Hey, Alpha fam, welcome back to another episode of Alpha Commission. I hope you guys are enjoying your pump today. Of course, on yesterday's episode, I did put it out extra early, that around 4 a.m., so that you could catch those bullish setups. So go ahead and look at the title, Bullish Setups, right? This channel isn't that well known for being bullish because, of course, it was started at the top of the market when I wanted to warn everyone that, hey guys, you might want to de-risk, you might want to take your profits, and you might want to buckle up because it's going to be a wild ride when everyone else was in disbelief about that possibility. And so for this channel to start giving you kind of a bullish cues, you might want to pay attention to that. I won't do it unless I'm pretty sincere about the move in front of us. And if we just go ahead and pop on the old Alpha Origin channels, you can see I've been having a very good hit rate of the drop here, the drop here, the drop here, right? The institutional battle here, the institutional battles here, the institutional battles here. And so now we're entering that true capitulation zone where I do believe there's at least one more leg down. I think that this isn't over. It's not going to look like either of these two previous instances, but it is going to be its own thing. And so there may be a pump, maybe even an attempt to get up here into that $30,000 range, perhaps 28,000 or perhaps 23,500, which is where I think it personally it would probably fizzle out, uh, just because of the acceleration and the momentum to the downside on this chart as is. However, if the Federal Reserve gives us kind of an interest rates holiday, let's say they only increase 50 basis points on the next meeting instead of that 75 basis points that they increased in the last meeting, well, the market is expecting 75 basis points. So if the Fed only increases by 50 basis points, then that's going to be something to celebrate and could give us a nice rally in this blue zone that I've marked out here, which of course is a tradable zone, just like the purple zone. However, it's also a good value zone. So if you did get locked into some type of holding position because you forgot to sell or something like that, it's probably not the worst thing in the world for the rest of your life. However, as long as we're in this blue zone and this purple zone, you guys know my motto: always be selling, always be taking your profit. Guys, don't hold on to this crap. Crypto doesn't love you, even if you love crypto. It will never love you back, okay? And the entire point of this market, as it's currently oriented, is to take your money. It wants to separate fools from their money. And so if you get a pump and you're holding a coin, sell it. I mean, take your profit, establish two or three take profit levels and just put food on your table, something that you can eat. Go enjoy some time with your family, derive some meaning from this economic activity, and don't just be holding the bags of billionaires as they continue to dump on your head. However, if we do get back into this green zone, just like we had dipped just briefly, right? Just briefly here, then I would suggest it is a good opportunity to consider to be buying to hold. And we have a bunch of levels that we can talk about, but basically, if we hit any of these lines on my chart, I would just suggest that you could DCA in regularly at those lines, or if you want to target the middle of the channels, then that would also work. The whole point is just to have kind of a structured approach to it. And whereas some guys, recommend for you to DCA weekly, something like that, I think it's quite foolish. Why, what kind of screwball would want to be DCAing in weekly at the top of this chart? My origin channels are specifically designed to protect you in that regard, where, okay, you could consider possibly to be DCAing in this area. I still prefer it to be, considered a trader's market, not a hodler's market. But, in this area here, definitely this is the hodler's market, okay? If you want to just hold something, if you want to be an investor in this area, you know, uh, go for it, because I really don't think you're going to get those chances again unless this world collapses, right? Which, by the way, is becoming increasingly likely as China and Russia push forward on, invasion plans of their neighbors. Getting kind of World War II vibes here, guys. Not great. But anyway, just dealing with what's in front of us, we don't really know what the future is going to hold, and we are in this kind of trader's zone, right? This is my always take your profit zone. Just what the heck are you doing holding? Take your friggin' profit. And this is the, okay, you can DCA to HODL zone, right? Not too bad. But this is just always be selling, always be taking your profit in these zones. Don't hold this crap, right? Just whenever you reach a level, like let's say we pump like, 15 to 20%, then you take your profit, right? If we retrace 15 to 20%, then maybe you buy a little bit for the next trade when we have another pump of 15 to 20%, and then you take your profit again. And you continue to act that way so that you are a trader and not somebody who's going to be stuck with something for a year or 2 years, or worse, if just the unthinkable starts happening in the economy or with war or whatnot. We've already seen the pressure that just Russia invading Ukraine can cause. Now just imagine China invading Taiwan, and we've got supply issues from Japan, from China, from Taiwan, making all of these processors and all of these microchips and all this stuff. We've probably got complications with Australia. I mean, shit is going to hit the fan if that Ukrainian Russian model translates over to the Chinese Taiwan model, where, by the way, the US is committed to militarily intervene as opposed to the Ukrainian situation. And so we've got a very tenuous situation on the global scene. And if you guys aren't aware of these things, you really ought to be, because just like interest rates and the Federal Reserve, it could deeply impact your wallet. So, guys, when I tell you, always be selling, always be taking your profit. Please listen. You don't know when the unthinkable could happen. Guys, on the economic calendar, of course, it is Friday, and so we're going to be looking forward to a couple guys speaking today. James Bullard, just the St. Louis Fed president, we've got the San Francisco Fed president, Mary Daly. And then, of course, the most important things, we're going to be looking at new home sales. The 5-year inflation expectations should be put out by University of Michigan also, not sure, but I believe so. And then, of course, they will be publishing their consumer sentiment index. And so we do put some weight into this data. It could cause a hiccup today. The bullishness that I was telling you about, those nice bullish setups yesterday, they could be, ending up being fake outs if this information is worse than what we would expect, which is basically, anything higher than 3.3% is going to potentially just disrupt markets. Going to cause a little bit of a wobble. Probably going to wait for the PCE data, that really hardcore data at the end of the month, to really cause any serious problems. But, this wouldn't be a good look. It could suppress the markets. And then sentiment is also important. The markets will be using that to judge, the general feeling. And of course, we are monitoring the fragility of the home sales markets, and of course, real estate, which is not doing its best, and it's starting to be impacted by all of this. In fact, it started to be impacted last year in China, where basically shockwaves were being sent out, and we're now feeling the ripples in the Western markets. And so we are in fragile times. And so, guys, always be taking your profits. Let's go ahead and just zoom in, because we would like to see what's actually going on here as we monitor this bullishness and these bullish setups, right? Some people wonder, why didn't I give the call to be bullish at the bottom of the dip here, right? Like, why didn't I get? Why did we miss this move? Everything pumped so much. It pumped so much. We missed it. We missed the bottom. We missed the absolute bottom. We're not going to be able to survive. Why am I even why am I even trading crypto and in the stock market now if I missed the absolute bottom? How could you do that to me? How could you make me so bearish? I blame you for that. Okay, ease up. You don't have to catch the bottom of that wick. Guys, we are way, 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 way down. Okay? Like, it doesn't matter if this is the bottom, or this is the bottom, or this is the bottom, or even if this was the bottom. If you're trading, right, which is what I suggested to do, to buy in this area, right, you can buy in and trade a pump. Then you've made your money on this range, right? If let's just pretend that you had bought this bottom, right? Let's just say around my bloodline, right? The bloodline is where, underneath the bloodline is where those DCAs, for long-term holds start making sense. Above the bloodline, you're just like buying the heat of the market, okay? But anyway, let's just say that you bought right on the cross of my bloodline there, in this kind of a juicy area, and then you sold the pump. Hey guys, you made your money for that level. Guess what? We have a little bit of a retracement. You maybe hold it, you sell it up here, right? Worst case, we start to break down, right? Start to approach this line again, and then you sell, break even. No loss. You already got the first pump's profit. If we break down, you buy either, you can choose your own targets, whether you want to target the middle of these ranges, to kind of front run it, or whether you want to target the support, where it's, all these lines are based on support and resistance. Okay, if you think I just arbitrarily set up these lines, you're wrong. They're based on support and resistance and a long-term examination of it, right? Like 10 years analysis of it, and I set these lines very intentionally. Now, there are a lot of lines that should actually belong in between. Like, there was probably a line here that we could have caught, but the point isn't to catch every move. It's just to be able to visualize the areas that we want to target, right? And so, since this does occur over a long period of time, you're really only dealing with like a two or three of these levels at any one time. And so you can see, okay, we broke down below this line, and then we're going to want to try to catch either the bottom or the middle of it. Like, that's going to be, you know, that's going to be our goal, to buy in the bottom half of it. And then our goal will be to take profit at the upper half of it, right? Ideally, maybe the bottom third and the top third, but that's going to be our goal. And so, same thing here. We broke down here, and then you could be buying. If as soon as you saw the recoil, you could have just started buying, because we had already broke down sufficiently. And if you saw that volume push, you probably could have bought in, and then sold in the upper third. You could even have sold here if you wanted to just sell in the upper half, because you're always taking your profit. You always selling, always taking your profit, putting food on your table, being a good trader. And then, of course, you could have bought in again and done it again, and then you could have bought in, and then as soon as we broke the neckline of this support, you probably wanted to have your stop loss and get the heck out, because especially if you violate this previous low, because most likely there's going to be another drop, right? And then you wait for the dust to settle here. Obviously we pushed down and then we started to pump back up. As soon as you saw that volume pushing us back up into that support, and we get above that support, then you could have considered to buy in, and then of course you would want to sell at the upper half, right? And you don't have to be so precise. Everyone wants to be, everyone wants the absolute bottom or the absolute top. All you need is a little bit of a strategy on how to actually take your profit and where to buy in, and just be a little bit strategic with it. You don't have to be perfect. Nobody catches the absolute bottom, and they would be idiotic to try, right? Because you don't know when it's going to stop falling. You have no idea when it's going to stop falling. So you're not going to catch the bottom. You're going to wait for the push up. And then you don't want to be buying at resistance. You want to be buying at support. So you don't buy the absolute bottom. Only an idiot buys the absolute bottom. You want to be above a support, right? This red line is my support. You want to be above support, and you want to be, you want to have that momentum to the upside, right? And so then we're going to have kind of a recoil, and you can expect that at least you're in this trading range, right? This big trading range, and most likely you're going to reach halfway up it, and then you can consider to start taking your profits. And most likely after these big drops, we do bounce around quite a bit. You can see how this works, right? Huge pump, break down, huge wick push back up, recoil a bunch of times, and then push up again, right? Break down, bounce around a bunch of times, right? Break down again, you know, bounce around a bunch of times. Break down. We're probably going to bounce around a bunch of times, right? One thing that you can notice, though, is that the momentum is to the downside and that this is getting sharper and sharper. So what we want to see as a bullish sign is that this territory down here is bigger than this shelf right here, and that would suggest that we're starting to slow down, right? If this is skinnier and we start to break down, then that suggests it could be a pretty big momentum to the downside. But again, guys, like don't worry about every single move, right? You're gonna just freak yourself out, and you're going to make it quite stressful on yourself. Just buy on support, you know, and sell, at closer to resistance, and you can put an imaginary, halfway point on each of these channels, and just, buy in here, sell in up here. It doesn't even have to be specific. It doesn't have to be the absolute bottom or the absolute top. Just, bottom third, top third, bottom half, top half. As even if you're making a dollar profit, at least you're making profit as opposed to losing money. And then what you don't want to be doing is buying at resistance and then selling at support. That just makes no sense. Okay, so because this thing could have just got rejected and fallen down to here, and that could have been your support, right? So just be careful where you buy in. Also, make sure that you have an understanding of what the support actually is. I knew this was going to be a kind of a support, and it's been a very good support. We actually are trading the mid channel of it right now. Let's go ahead and just put on our local group. What do we have going on here? We have broadening wedges. Okay, a lot of people are calling these inverted head and shoulders. What they really are is broadening, wedges, right? And of course, they look similar to inverted head and shoulders, but the difference is that an inverted head and shoulder, this one might qualify. The price action is pretty similar, but generally speaking, you want to go by price action. And if this shoulder is higher than this shoulder, then the price action pretty much is to the downside. The whole point of an inverted head and shoulder is to suggest that you're going to pump the neck, the head to the neckline, and then that would suggest up here. But you can see it didn't work out, right? Why didn't it work out? This was an invalid head and shoulders, right? It was just a broadening wedge. And there's a very fine nuance there. All of these things are statistical. Most of these patterns are complete bullshit. And so if you had tried to trade on an inverted head and shoulders here, where it was actually pretty much an invalid one. You got this sloppy slope, you've got this really low right shoulder. The price action is overall to the downside. The measured move for that type of broadening, wedge to the downside is a pop up to about the height of the original breakdown, right? So we actually did end up meeting that line. But if you had been trying to use a head and shoulders, then what you would have expected was something like this, right? Which would have had, off of your shoulder, something. Yeah, you can just do it here. It would have had a measured move up to 38,000. And so that's why a lot of people were getting faked out and thinking we were going to go to 38,000 up here, right? Like this was just a temporary dip and then we're going to continue this way. Well, we didn't. This was just a broadening wedge. It wasn't an inverted head and shoulders. It wasn't a proper one, right? I mean, again, at the end of the day, price action matters. And so, when we got limited here at, below this, this high point, you pretty much could expect it was just going to chop around. And of course, the retest here was was where you should actually consider the push, maybe right here, and it just was unable to do it. So what essentially happens is that you end up forming a more actually of a rectangle, just a regular channel, right? More of a rectangle, and then potentially you can come up to the top of the channel, right? So that's basically that. Over here, and then of course, if you did have a breakout later on, it would just be the move of the channel, right, to that 38. It's not really the head and shoulders that did it, right? Like at that point, you're just justifying your own, the patterns that you're looking at in the clouds, right? You're just justifying it. But in fact, you could just pretty much expect that since we broke to the upside, we were going to retest the top of the range that was basically being established. Maybe this is a little exuberant negativity there, right? Same thing here. You could pretty much see that we do have this broadening wedge, and so a very you know a very conservative estimate would be just the breakdown here of the wedge itself, right? The high point before the breakdown. And so if we break up here, perhaps we could get some type of retest, and then off of that point the measured move is going to be to the top here. Now this could chop around a bit, sort of like what it did over here. And then, you could get up there just like what it did here, right? But the key point is that you really want to kind of limit your expectations for these broadening wedges. They are not perfect, a perfect inverted head and shoulders. They are very similar to head and shoulders. They are not perfect head and shoulders. A more perfect inverted head and shoulders, would be something like this. And guys, just keep in mind that it's all about price action. It's not about these type of shapes. Or even better, um, something like this, where this shoulder is higher than this shoulder. So either even or this shoulder is higher, because that shows the price action is kind of rising, right? Like that gives you a higher likelihood of the breakout to the upside, with the height to the neckline. And so don't get too excited when you see these diagonal, head and shoulders. A lot of the times they're broadening wedges, and they also have measured moves to the downside. It's just there's a higher likelihood that they break to the upside, and it is less statistically. These broadening wedges are statistically less likely to carry out the measured moves than head and shoulders. So proper head and shoulders, right? Where you either have equal height, or you have closer to the level that you actually want the price action to go, right? And then the measured move is the height to the neckline of the head, right? So, guys, just to keep in mind that some of these things can fake you out. Some of these things are imperfect. And additionally, we don't actually have the same formations going on in the CME markets that we do on spot. So if you ever want to just double check your formation, you can also double check it over here on CME just to see if you've got pretty much the same thing going on. And look, right, we have the breakout. Maybe this one could be here, right? Something like that. You have the breakout, and then you're trying to push up. And, if you just want to be conservative, the measured move is going to be here, which is defined by this point. It's not defined by the neckline. If this is an inverted head and shoulders, yeah, you can use the, in this case, I think it's actually, both are going to be very similar. No. The descending broadening wedge would actually give you probably a better, expectation. It does seem to be also just kind of like a descending channel, like if you just ignore this kind of wick right here. And so if that is a channel, then you could expect the breakout wherever it breaks out, then you know to use the height of the channel, and that would be the same measured move as the descending wedge, broadening wedge formation. And so a lot of confluence suggesting maybe 23,385. Whereas if you were over here on the spot market and you were saying, "Oh, this is an inverted head and shoulders," you're going to be targeting. Look at this. This is insane. You're going to be targeting, something like 28,000. But if you come over here, you're really targeting 23,000, maybe 400, right? Just say 23,500, just to be kind of generous, right? And so, guys, 23,500 and 28,000 are considerably different, considerably different. So keep your expectations modest when you do see these broadening wedges, basically imperfect inverted head and shoulders, right? You can also have them on the upside, so they could be imperfect head and shoulders also. But especially when one of the shoulders is not aligned properly, like when the left shoulder is a little bit too far in the wrong direction, then you do have a higher chance for failure. Just a little discussion that we've been having over in the groups about these type of things. There's nothing wrong with using patterns to trade. Just at the end of the day, price action is king, right? And you can see that when you have the asset on two different charts, you can have completely different results. So, in my opinion, it is good to check with the CME charts, just to temper your expectations a little bit, because the professional exchanges are obviously going to add volume and liquidity to the market, and that's just going to impact how it's going to trade. And these professional traders are going to, to move the market in a slightly different direction than perhaps the 24-hour exchanges. And so again, like having different expectations is important. It doesn't mean that we can't get up here, right? Because perhaps this is another channel and then we break up again, and then look, we have another move to the to 28, right? Let's just say that this is basically a channel, right? This is just a channel. We're breaking up. The measured move to that for that one was to here, and then we have yet another channel. Just say like we start to bounce around in here, then perhaps the move is going to just break up, because now this is the height of this channel, right? And so you can get that area and you can keep going, but you can't just say it was because of an inverted head and shoulders. That's just the key point, okay? So let's look for this kind of move. Hopefully we can get that, but of course there is a good chance that we could be faked out as well. And one of the things that I want to point out about this is that if we turn on our EMAs, let's go over to the 6 hour. Let's get rid of this ambitious move. Let's just keep it modest for right now. You can see that in the previous cycle that we had up here, where it had a very similar structure, very similar price action, very similar EMAs splaying out, you can see that we did get a peak around where the 55s, the MA and the EMA were, and then we had a nice breakdown. And of course, that was in that region of the 34 EMA where we started to get that kind of breakdown, and we just chopped to the side, kind of suppressed by the 55s there. And so if we do just kind of get suppressed, by the 55s and chop around a bit, then that really wouldn't be too unexpected. And then you can see that as the 55 MA kind of like started to lift us up or hold us in place, which it's about to do right now, then it only took like a couple instances of of oscillations on the chart before we got a nice pop up through the 89. Is that going to happen again? I don't know. I don't know. Perhaps it could. But really, what I would be looking at is whether or not we can preserve the bullishness of these EMAs, where you see this 34 kind of flattening out, and then you see the 10 and the 20 just really pointed in an upward direction, right? So it's sort of like right here, where maybe we're going to get like a little pop, like we could still get a little pop, but because of the negative direction of all these other EMAs, especially this 55 EMA, there's a good chance that we can also get just smacked back down until these start to round out a little bit more, get more into a squeeze pattern, and then hopefully nothing negative happens in the market. Those inflation reports, Jerome Powell, the PCE data, whatever. Hopefully nothing negative happens in the market so that we can get a chance to reach that 23,500 and then perhaps even do it again, right? And break up and get to that 28,000 stretch goal, right? Which we were unable to do here, right? So if we had a if the head and shoulders, the inverted head and shoulders had worked out over here, we would have reached this region and we just never did it. So I don't trust this pattern. I'm the reason I'm spending so much time on it is because this is how the market can fake you out with these type of patterns, and I just want to bring skepticism to it. I don't want people to like risk everything on this pattern, and I also want to underscore that of course we do have the shorting ETF that just opened in the United States, that a ProShares Bitcoin shorting ETF, and they would love to get you bullish so that they could short you down to hell, right? So let's just see what's going to happen. But otherwise we do have, of course, on the daily, we do have that perhaps corrective momentum to the upside, and it's just a beginning. So if we've just gotten just a hint of flavor from it, as long as there's not bad news that dumps us to hell, then perhaps we could get a pretty decent pump. So let's continue to be optimistic, but just be a little bit more realistic about what we're trading from. And I would suggest just a modest goal would be a 23, 400-ish, just to be on the safe side. And if I had to put local zones, I would even suggest this 22,750. And then one thing we really have to come to terms with so far is that we have not broken past this zone of resistance that I suggested maybe 3 or 4 days ago. I suggested this would be our resistance, and look at that. It's just been holding really, really strongly. So we haven't broken through that yet. However, you can see the curve that I outlined, and so we are getting that lift. If we do get smacked down, if we don't break too far below this curve, then perhaps we are going to get squeezed quite nicely in the next move, or maybe the move after that gets squeezed quite nicely, assuming that all the news is good. And then we would be targeting this $24,000 to $25,000 area, assuming that we can break through this 23,400. You can see this EMA might start skirting around here, and then getting those 50s to lift us up on the daily would just be something that we haven't had, since back here in April, right? We haven't gotten kind of like a nice scoop. And of course, that was the fake out that made everyone think that we were going to go to heaven again. And so if the market wants to replay that and get one of those bullish fake outs, then that would be a great way to bring liquidity back into the market before dumping it further, right? And so alts are kind of anticipating that, and so you are seeing a bit of a pop in the market. As for the Nasdaq, nothing has really changed. You can see that we're still attempting to just hold on to this zone, that 11,800. Look at that. I had called 11,800 and we went there precisely. Of course, that's not magic. It's just we needed to hold that area in order to have bullishness on the charts. And then let's see if we have, either a pullback to perhaps 11,400, depending on the news today, perhaps, and then perhaps a bullish pop-up, or if we end up just pushing forward, perhaps to this 12,000, 200 area. See if we can just, really push through there. In which case, that would help crypto quite a bit. But in any case, as you can see, I am expecting it to be just one of those kind of fake outs that we've had up here. And perhaps we have one of these, these 5-bar kind of Elliott waves. Some people could say this is an ABC correction and it's done. And it's time to put a, an Elliott wave or whatever, 5-point Elliott wave to the top. But I'm not on board with that. I think we've got a lot of work to do in this economy. I think we've got a lot of issues to sort out in the world. And so to be super, super bullish is just beyond my capability at this point. But can I imagine a nice run, perhaps to, 12,225, perhaps to, 13,000? Maybe even up to this line. Sure, why not? Sure, why not? Let's hope it happens. But then if we break down, I'm just going to be targeting these type of confluent areas, which whether we're using log or whether we're using linear, just we've got these kind of like confluent areas, which would kind of be targeting, especially this 9,500 again on the Nasdaq 100. And then perhaps lower, right? Perhaps even lower. But that $10,000 level does seem to have, a lot of confluent diagonals to it. And so if we got a kind of wick below that, maybe that 9,500 would be confluent with this peak over here. And then if we really push down, then 8,000 would have quite a bit of support, right? Let's go over to the S&P 500 mini futures, and we basically have the same thing going on, just in its own way here. And so again, we're looking to see if we can kind of push up, kind of grab this support area around the 382 here that I have marked out. And not sure if this is 100% perfect how I've drawn this out. Like we might be above support. I don't know. It looks very just on the line anyway. So we're just going to want to see if we can grab a hold of here and maybe even fill in this gap up here. Or if we perhaps do a retrace, I just wouldn't want to see us violating around that 3,700, just maybe kind of a deflection off of it, and then perhaps continue on our way, or perhaps even more shallow, maybe here at the 236 that I had marked out. But let's see, guys. All these charts looking very similar, just at or above support, and then with little gaps above them, kind of making those stretch goals for us to push up. Russell managed to hold on. I was mentioning it was be very dangerous if we had broken down from this 164, but we did manage to hang on. We are getting the possibility of a daily squeeze setup here, sort of like this, and that could perhaps take us on another little run, perhaps so that it could reach its next support and fill in some of these gaps of its own. I don't need to go over all of those. Check out volatility. Volatility continues to come down. Yeah, I mean, yesterday we just had people like trying to freak each other out for some reason. I don't know why. It was a pretty bullish setup day. It looks like we're still coming down to this support line that I marked out. And so I would just suggest we're probably going to start rounding out or coming down to this line. But at some point, we will turn around in the future, just not today, perhaps, unless something really, unless the news is really bad. The trend is to the downside here as we just follow this kind of triangle here. And then I think the next push up, just in my opinion, the next push up is probably going to be something scary. But who knows? We could end up breaking down from this triangle. And if we do, that could give us lots of nice momentum to the upside in the stock market because, of course, the VIX does limit our ability to trade by making it too unstable. And you like some volatility, so if you get the closer you get to this low region right here, actually trading becomes really good in this area because some volatility is great for trading. Too much volatility is hell for trading. And then the dollar continues to just crab sideways. Not sure what the dollar's doing. Just markets are a bit indecisive. Looks like it wouldn't be unusual for it to kind of have a dip before it put in another push. And so if it is just crabbing sideways and has a small dip, that could give us the chance for relief rally in the stock market, just while the dollar is being less oppressive, right? And of course, the dollar, like the VIX, the higher they go, the more they suppress the markets. And let's go ahead and just check maybe one more thing. Maybe, yeah, let's check out USDT coming down significantly. So money is coming back into the market. And you can see this this could be, I mean, this could have been the top, I guess, but it could also just be, retesting these levels because maybe people pulled out too much money from the market, sort of like here, right? Like in the beginning over here, and then maybe they're just gonna just get a little bit of money back into the market to be ready to deploy as people start talking about the bottom of the market, and then maybe one more scary shakeout or something, and then who knows, right? Something like this. I mean, this whole process right here took quite a while, so until we got to a pretty good low. So we'll see. It just looks like to me that we're just up and at best sideways. That's the key point. I'm not really ready to predict a bull run like this. I don't think like this is just going to go to zero the way that it went here because people are just going to buy back into all of their cryptos. I think we're just going to get a little chop sideways around these support levels. Probably these two are the ones that it's going to play with. And then there's probably going to be a nice run and then a scare and then go sideways a bit some more. And then we can, talk about, the next bull run, right? The real bull run. I guess in the same breath, we can talk about the total market. And you can see just on my log scale here, we really haven't met my goal of that 650-ish area. Would prefer us to push down once more, get to 650, tag the trend line, and then go on our way. Of course, if this isn't being set up perfectly, and if I just get this little wick there, and I get this wick here, then we could be closer than what I thought. Let's see if I'm actually grabbing that. Yep, just grabbing that wick, because that represents the ultimate terror, right? Then the ultimate terror here. Let's bring this down just a little bit more. And, you could see perhaps, let's just call it $700 billion. Maybe just something like, this, right? And then we can perhaps see our accumulation pattern and our next bull run whenever. Maybe this could pump up, do something like this, fake people out, right? Just something like this. That's what I want to see for the true capitulation. And if you're an Elliott waves guy, then again, I don't really use these. There we go. Boom, boom, right? Something like this. Boom, boom, and then boom. So it would suggest, some type of bullishness if we are having one of these kind of impulses, right? And for me, I would be pretty satisfied with that. If we had a nice run, we made a little bit of money, we always took our profit, right? We always were selling, always taking our profit so that we didn't get screwed over just in case this thing dumps back down. That would be fine by me. Let's do something like that. And you can see how this looked back here. It's a little bit sloppier, but you can see kind of a similar thing. Happened, right? And this ended up being kind of a diagonal double bottom. But nevertheless, effectively, we had a very similar type of, setup there. And you can see on this one as well, right? Not 100% sure how to look at this one, but I think that's good enough. Could have been like this. Just the COVID era, like, really distorted it, right? Something like that. Because I believe it would have been like this. This is what I believe it should have been. And then like this. That's what I believe it should have been if it hadn't been for the Federal Reserves in every country in the world suggesting they were going to print money, and then the stocks collapsing, and then of course the run. But if we do have just this kind of a level, I mean, hypothetically, we could say that we are done, right? And that this is the trend, and that this wick was just like the black swan. I still don't believe it. I think we actually retested these levels properly, right? So who knows? Who knows? Maybe it's the bottom, or maybe we have, one more left to go. in which case I'd like to see this. But either way, we're preparing ourselves psychologically in case we have some bullishness right now. And then we're also going to be taking our profits in case we drop down and if the world just gets a little bit shakier again. But be ready for both ways because this market doesn't have to do anything. Okay, it's a new market. It has, you know, quite interesting different players in it than the usual markets, the traditional markets, and although it's being accumulated by a lot of those people in the traditional markets, that doesn't mean that it's ready to behave exactly how we would expect. But since the traditional markets do suggest that there could be a possible continuation to the downside before they get to their trend, I would just suggest that, you know, perhaps that's really sloppy. Sorry about that. But that perhaps we could um, still have a level down to go. Just maybe. 21,200 on the charts here. Getting into that heavy resistance. Gonna be a challenge to pull through. I was noticing yesterday we were having some pretty good setups, and now I've got this flashing over here on the oscillators. Continuing our corrective move, which is confirmed to the upside. Maybe just chop around a little bit here. That wouldn't be too big of a deal. Like the main thrust has gone through, but maybe just chop around a little bit, just like what we did up here. Maybe a little bit shorter. But and this Stokes is just way off. Not really sure why this Stokes is so bad on the daily, or maybe I'm just reading it wrong. But yeah, we didn't really max out. This thing tends to stretch on, and then the longer readings tend to be the more accurate ones. And so uh, I guess we just pushed up enough from this low. Yeah, that's what it is. It's because of how low we dropped here. We pushed up enough on the low to kind of max out too early. And then what we're really looking for is the normalization, and then we can see the actual peaks, right? So probably same thing here. We're pretty much topping out, but in reality, this might be a little bit over exuberant, and maybe we do need to go sideways for a little bit, normalize, and then we can get a clear picture from the Stoke. MACD continuing to cross bullishly, threatening its next cross. It already has had one bullish cross, threatening to make the backup one, the main one. Money flow turning positive. The trend is increasing. So, I mean, this looks pretty good. I mean, assuming that this doesn't get rejected here, but we would like to see this curling up a bit faster and the red one curling down a bit faster. Pardon me. And yeah, we could come down just for a retest of this breakout on the RSI, and hopefully we don't break down again, right? Like up here. Let's see what this corresponded to. So this move, that's a bit too far back. Yeah, this move had a significant drop right here. But it looks like we've already had a pretty similar move. And we're really just looking for the launch off of the EMA, the RSI EMA, in order to get that next push up. So yeah, as long as we're curving down a bit, maybe we're just going to come back, test the RSI EMA, and then push up. So let's look out for that. Otherwise, guys, not much more to say here. It's been a pretty long episode. Hope that's helpful. And we've been in some trades like Zilliqa, which have been going pretty good. Hopefully, you're finding something that's working for you. But yeah, we had these targeted areas over here and got the squeeze for a nice 20% move. Looks like it's retracing. Let's see how that goes. All right, guys, that was your alpha for the day. Stay safe and happy trading.